Good morning, students. Hope you are doing well. So, students, today we are going to discuss intangible asset standard. So, prior to this class, we had a two session on Ind AS 16 property, plant and equipment. Just to give you a comfort, the 40% concept of Ind AS 16 property, plant and equipment applies to Ind AS 38 as well, right? The way we are doing the depreciation, the cost model, revaluation model, right? So few concepts are same, which we have read, which we have understood in Ind AS 16, right? So when you have completed your Ind AS 16, if you have a very good command on Ind AS 16, then at least 40-50% when we will go through with Ind AS 38, you will be able to revise your Ind AS 16 as well. Okay. So first of all, whenever you will prepare for your examination, whenever you will do the revision, read Ind AS 16 as well as Ind AS 38 together. Together, I mean to say first complete Ind AS 16, then complete Ind AS 38. Friends, both are the non-current assets. Intangible asset is also a non-current asset because it is used for the future. It is used for the long time, right? It is not used for only the small period of time, small amount of time. Now, if I talk about the standards name and number, of course, it is Ind AS 38 in Indian Accounting Standard as far as intangible asset is concerned. Globally in IFRS, it is IAS 38. In India, it is Accounting Standard 26, right? If I compare Accounting Standard 26 with Ind AS 38, no major differences are there. So differences are there. So one or two major differences there, but not a lot of differences are there, right? So let's start. As far as the standard is concerned, so we will restrict our discussion first of all on objective and scope. We'll talk about why this standard, where this standard is applicable. So then the most important part, like PPE, I have spent good amount of time in the definition of PPE, right? So in the definition of PP start with a tangible asset, but this standard is intangible asset. Okay. So we'll start the definition. We'll discuss the definition of intangible asset because this definition is very important. Then we will talk about recognition criteria when an item will be capitalized as a intangible asset, right? Like in our PP, we have also discussed when an item will be capitalized or recognized as a PP. You remember, I have talked about two conditions: future economic benefit is probable and cost can be measured reliably. You will see those two conditions here as well, right? Here some other conditions are also there, but at least those two conditions you will see here. Initial recognition and measurement. Again, like PP, we will be talking about initial recognition, right? And initial measurement. Okay. So at what value that item needs to be capitalized and recognized as an intangible asset in the books of accounts. We will be talking about mode of intangible asset. What happens if a company is buying an intangible asset? So it is pretty straightforward case. What happens if a company is exchanging an asset in lieu of acquiring an intangible asset? For example, the company is surrendering its building in favor to the government and government is giving a license to the company. So the company is exchanging the asset in lieu of acquiring an intangible asset. The government has given the intangible asset by way of government grant, or the company has got the intangible asset by way of business acquisition, by way of purchase of an entity. We will be talking about the mode of acquiring intangible asset, right? When I'm saying mode of acquiring intangible asset, in different kind of acquisition, at what value that intangible asset is going to be measured, right? Like in Ind AS 16, in exchange of asset, you remember we have read that in case of exchange of assets, we have to recognize, we have to measure the acquired asset at a fair value of the asset given up, right? At the fair value of the asset given up, because whatever you are giving, that is the consideration. So that way, in a different kind of mode of acquisition, we will be discussing what is the value at which these intangible assets are going to be measured, are going to be capitalized. Okay. Then we will be talking about subsequent recognition and measurement. We will be talking about recognition or measurement subsequent to the initial recognition and measurement. In case of subsequent, we'll talk about cost model, we'll talk about revaluation model, right? So those concepts which we have already discussed in Ind AS 16, we will be talking about in this standard as well. Then we will be discussing amortization. So amortization is nothing. It's a similar term which we have used in PPE. In PPE, we are calling it as a depreciation, right? So there are three terms: depreciation, amortization, and depletion. Depreciation term is used for tangible asset. Amortization term is used for intangible asset. Depletion term is generally used for mining kind of asset, mining assets. Okay. So that the word is different, but the objective, the nature, the feature is same. Depreciation is used for the tangible asset. For example, if I have to depreciate my laptop, if there is a laptop is a tangible asset, PPE. So I need to depreciate my laptop over the useful life. If there is a software, I need to amortize my software over the useful life, right? If there is a mining reserves, if there are mining rights, mining reserves, so those needs to be depleted over the useful life. So friends, in this case, we will be talking about the amortization concept and useful life of intangible asset. Since in this useful life of intangible asset, there is some concept which I need to talk about. The useful life concept is pretty different in intangible asset in comparison to accounting standard. So these parts I am going to talk about as far as agenda of the Ind AS 38 intangible asset is concerned, right? Right, friends? So let's start the journey of intangible assets. Coming to the objective, as I told you, the name is intangible asset, the title is intangible asset. So it prescribes the accounting treatment for intangible asset which are not dealt in other standard. Friends, when I'm using the word intangible, right? So what do you understand by intangible? What do you understand by intangible? When I'm using the word intangible, what do you understand by intangible? Yes, intangible asset means the asset which you cannot see, the asset which you cannot touch, right? Like your, and what could be the example of intangible asset? Software. You cannot see the software. For example, when you are buying a tally software, you got a set of files in the pen drive. When you plug that pen drive, right, you run that program and you will get the tally software in your computer. Okay. SAP. So SAP again, the value is huge, the value is high, and this SAP is again an intangible asset, right, which you cannot see. When I'm saying you cannot see, I'm not talking about the screen. Like building you can see, building you can touch, that SAP software you cannot touch. Okay. Rights, like government is providing some licenses. Okay. Goodwill. Okay. Copyright, trademark, patent. So these are intangible assets which you cannot see. But of course, these are assets. Yes, these are assets because these assets have some rights. Okay. When we will discuss the definition, we'll get more deeper into it to understand the intangible assets. Right. So many students have given so many examples of intangible asset. So I do understand that at least you understand what is intangible assets, right? When I'm talking about intangible asset, the basic feature is you cannot see those intangibles, right? You cannot see those intangibles. So there are so many assets which are assets, but you cannot see. You cannot see. In that case, whether all those items will be intangible asset, answer is no. Dealt in by this standard, answer is no. So this standard says that this standard prescribes the accounting treatment. Accounting treatment of what? Accounting treatment for intangible asset which are not dealt in by another standard. Sir, can you give me an example for that? Deferred tax asset. Deferred tax asset. Whether deferred tax asset is an asset. What is the basic definition of an asset? An asset is a resource controlled by the entity right? Arising out of past events, which provides the future economic benefit. Whether deferred tax asset is an asset, answer is yes. An asset is a resource. An asset is a resource controlled by the entity arising out of past events and which provides the future economic benefit where the future economic benefit is probable. Deferred tax asset, since the entity has paid higher taxes in the initial years, that is why this deferred tax asset is there. In future, the company has to pay less taxes, and that's how this deferred tax asset will be utilized. This deferred tax asset will be neutralized or utilized, and that is why it is an asset. Can you see the deferred tax asset? If I need to ask you whether deferred tax asset is a tangible asset or intangible asset, what you will say? Is it a tangible thing or it is an intangible thing? What you will say? Sonia is saying, sir, it's an intangible thing. Right, Sonia? So deferred tax asset is an intangible thing. Intangible, but it is an asset. So whether deferred tax asset will be covered by this standard? Please tell me. Is it an intangible asset? Is it an intangible asset? Yes, it is an intangible asset, but deferred tax asset is not covered by MANSA. It is not covered by Ind AS 38. It is covered by the separate standard, which is Ind AS 12, right? Even in our accounting standard, there was a standard called as Accounting Standard 22, which covers the deferred tax asset. Okay, so there are so many assets which are intangible in nature, whose assets will not be covered by Ind AS 38 standard. Okay, why? Because there are some separate standard which takes care of those assets, right? Which takes care of those assets. Is that clear? And when I'm saying the accounting treatment, do I need to refer only accounting entries? When I'm saying accounting treatment, do I need to refer only accounting entries? Guys, do I need to refer only accounting entries? Accounting treatment means, you remember, I have talked about 4 parts of accounting treatment. I've talked about 4th part of accounting. RMPD, you remember? RMPD, you remember that? Yes, Nisha is saying RMPD, which is recognition, measurement, presentation, disclosure. So this standard covers the recognition, measurement, presentation, disclosure, all the aspect of intangible asset. Right? Tanisha is asking, sir, can the license fee paid in advance be an intangible asset? Tanisha, license fee paid in advance is like a capital advance. And capital advance is not an intangible asset, right? Because if you have given the capital advance, until and unless the asset will not come to you, you will not be able to utilize that, right? You will not be able to get the future economic benefit out of that asset. Okay. So license fee paid in advance is not an intangible asset, but license is an intangible asset. Let's say the telecom companies are paying a license fee to the Department of Telecom, Government of India. Right. So when they are paying the license fee, until the time they are not getting the license, it is not an intangible asset. It is a capital advance. But when they will get the license to operate, for example, if the government has given, Department of Telecom has given a license that you can operate your telecom services in the state of Haryana, state of Gujarat. So in that case, they got a right to operate, and that license is an intangible asset. Tankra is asking, sir, I have a general doubt. Before introduction of these kind of accounting standard, How were the financial transactions recorded? On what basis were they recorded? So Shankara, if I talk about 50, 60, 70 years ago, even there was a concept of single entry system. There was no concept of double entry system, right? Our accounting standard got started in 1977. So of course, these kind of accounting standards are not there, but at least there are some basic principles of accounting is there. Okay. You are right. So these kind of granular accounting may not be there, but at least basic accounting was there. Probably someone is not classifying it as an intangible asset, but someone is classifying it as an asset in the balance sheet with a different name or with a different nomenclature. Or probably in the past, it might be possible that tangible and intangible both are merged and shown as a single line item. It might be possible. But I'm talking about 50, 60 years ago, right? Even this IFRS has started in 1973. Our accounting standard board was formed in 1977. Okay. Yeah, let's move on. So we understand that we understand the intangible resource, right? So if intangible resource is qualifying as an intangible asset, and if it is covered into a different standard, then it will not cover here. Otherwise, it will be covered under Ind AS 38. This standard, of course, provides recognition criteria, determining the carrying amount and disclosure. Coming to the scope, as I told you, this standard shall apply in accounting for intangible asset, for all the intangible asset except, right? This standard shall apply in accounting for intangible asset except financial assets. Ind AS 32, financial asset, trade receivable. What is a financial asset? What could be the example? Trade receivable. So trade receivable is a financial asset. Okay, this is not derivative instrument, mutual funds. So investment. Can you see the investment? You have a 50 crore rupees of bonds. You have that paper, right? You have that paper. That paper has give you a right. It is a financial asset, right? So, but this financial asset is covered by Ind AS 32, Ind AS 109, and that is why it will not covered here. Exploration and evaluation assets. So exploration and evaluation assets are covered under Ind AS 106. It is not covered here. Expenditure on the development and extraction of minerals, oil, natural gas, and similar resources. Let's say government has given you a right, mining right, to dig, that mine and get the mineral resources. Right? So the mining right is an intangible asset, but when you are incurring an expense on digging for extracting the mineral, oil, natural gas, and resources, so it is not an intangible asset. The right which is given by the government to you is an intangible asset, but these are not intangible assets. Intangible asset arising from insurance contract issued by insurance companies. So if the insurance companies, intangible asset arising from insurance contract issued by insurance companies, insurance contract is again, it's an intangible resource, but not an intangible asset covered by Ind AS 38. Why? Because it is covered by a separate standard, Ind AS 104. Intangible asset covered by another standard such as intangible asset held for sale. You remember we have also excluded this held for sale in PP standard as well. So if there is an intangible asset which is held for sale, let's say an entity which got a telecom license, and this entity wants to sell this telecom license in favor to the other entity. Like when Reliance Communication, Anil Dhirubhai Ambani Group, when Reliance Communication shut down its business, so the talks was there that Reliance Communication will transfer the telecom licenses to Reliance Jio. Right? So if an entity has decided to sell its intangible asset, it may be classified as intangible asset held for sale. So we have a separate standard in Ind AS 105, which will also be covered as a part of the financial reporting curriculum. Deferred tax asset. I have recently taken an example of deferred tax asset. It is covered by Ind AS 12. Lease assets is covered by Ind AS 116. Asset arising from employee benefits, it is covered by Ind AS 19. Goodwill is covered by Ind AS 103 business combination standard. Asset held by an entity for sale in the ordinary course of business, which is inventory, Ind AS 2. For example, Infosys is selling software. So Infosys is selling software, Tally is selling software. So these are the inventory. These are the inventory for these companies. These are not the intangible asset for these companies. Asset arising from the contract with the customer. It is covered under Ind AS 115. So friends, moral of the story is, if something is specifically covered by another standard, it will not be covered by Ind AS 38 intangible assets, right? Sir, do we need to learn this? Do we need to remember this? Not necessarily required. Right? If you will apply the logic, for example, deferred tax asset, when you complete your curriculum, you will understand that for deferred tax, there is a separate standard. Financial assets. You will have a 8 to 9 sessions on financial assets, on financial instruments. You will be able to understand, oh, these items in the balance sheet are financial assets. And of course, we have a separate standard. Asset held for sale, you will be able to remember that yes, there is a separate standard. Inventory, there is a separate standard. Ind AS 103, there is a separate standard. So when you complete your curriculum, you will be able to understand that these kind of items are not actually intangible asset, which will be covered by Ind AS 38. Rather, these kind of items are different assets, which has to be covered by different standard. Is that clear, friends? Is that clear? Sir, the money in the form of cryptocurrency, can those be classified as intangible asset? So there is no specific guidance on the cryptocurrencies, but let me tell you, these cryptocurrencies cannot be intangible assets straightforward, right? So I'll discuss the definition of intangible asset, then you will be able to conclude, is it an intangible asset or not an intangible asset? It may be a financial assets, cryptocurrency could be. Definition. Asset is a resource controlled by an entity as a result of past event. Friends, an asset is a resource controlled by an entity. So control word is very important. So this asset should be controlled by the entity. How a control will be obtained? How can you say that you control that asset? How can you say that? Probably when you have purchased the asset, the control has been transferred to you. So control comes either by possession or by the power. Power means control comes either by the contractual rights. You have entered into a contract, you got the rights transfer into your name, right? So either it is contractual or legal, or it is due to the possession, right? This is how you got the control. In a real life example, I have seen some societies, your residential societies, where the occupancy certificate has not been obtained. The registry are not happening, but builder has given the keys to use those flats to the buyers. So the buyer got the possession. They didn't got get they have not become the legal owner, but they got the possession. They got the possession means they will be able to use those rights. They will be able to use that property. So in a kind of a property, plant and equipment, or a physical asset or a tangible asset, the possession may be possible, but in case of an intangible asset which you cannot hold, which you cannot see, which you cannot touch, the possession may not be right. Okay, so in case of an intangible asset, probably the control comes through the contractual right. Okay, but right now we are discussing the general definition of an asset. What is an asset? An asset is a resource controlled by the entity as a result of the past event. Past event could be you have purchased that asset, and from which the future economic benefit are expected to flow. So future economic benefit is again an important word. The control is again an important word, right? So we will discuss these kind of concepts while discussing the definition of intangible assets. Now, what is meant by intangible asset? Friends, intangible asset. If I talk about, if this definition may not be there for this intangible asset, probably you will not be able to distinguish whether it is a PPE or it is an intangible asset, right? If this definition may not be there. And why I'm saying so, intangible asset and PPE both are non-current assets. Both are non-current assets, right? The definition of PPE starts with tangible assets. The definition of PPE that is why the definition of PPE start with the tangible asset so that the people will not get confused while doing the accounting treatment of these kind of items. So one thing is very much clear. If something which you cannot see, if something where the physical substance is not there, it will not come into the PPE standard. Why? Because, sir, the definition starts with the tangible asset. So what is the definition of intangible asset? The definition of intangible asset is an identifiable non-monetary asset without physical substance. There are three parts of this definition. Number one, an identifiable. Number two, non-monetary asset. Number three, without physical substance. An identifiable non-monetary asset without physical substance. This is the definition of intangible asset. An identifiable non-monetary asset without physical substance. This part is very much clear. Without physical substance means the physical substance may not be there for that intangible assets. Now I'll ask one question. Let's say you got the license. Right? License to operate. Let's say telecom licenses. So whether the telecom license has a physical substance, and when you got the license, you got the paper, you get the certificate, or government has issued a letter to you, government has issued a certificate to you, and you can see that certificate. So can you say that that license is a tangible asset because there is a physical substance to that license as a form of the paper? Yeah, you are right, Rahul. So that piece of paper, you cannot say that it is a physical substance, because the significant part is intangible, right? That piece of paper is just a formality. That piece of paper is formality. I mean to say that is a procedural aspect. Okay. You cannot see that the telecom license, which is worth 50,000 crore, is a tangible asset which is on the piece of the paper. It is not a tangible asset. There is no physical substance to it, right? The integral part, the significant part is intangible, which is the rights which is inherited, the rights which is inherent in that agreement, in that contract, in that piece of paper, in that license, right? So license is an intangible asset without having physical substance. The second example could be software, right? You got the software, you got the software. You got the software in a pen drive. You got the Viraj is saying, sir, license cannot be said as tangible because of piece of paper. You're right, Viraj. You got the pen drive in which the software is there. You just plug the pen drive in your laptop. There is a program setup files. You will run the program setup files, and you got the software into your laptop. Right? Will you say that software, that Tally software is a tangible asset because it is there in the pen drive? So it is not it is not a tangible asset. It is an intangible asset. When you talk about the tangible or intangible asset, probably that intangible asset is stored. That intangible asset has been communicated or stored in a physical substance, but that physical substance does not have a significant value, right? That pen drive does not have a significant value. The program inside the pen drive has a significant value, which could be into lakhs, which it could be into millions, even which could be into crores as well, right? The pen drive has a value of, let's say, 400, 500 or 1000 rupees maximum. So guys, there could be a knowledge which is embodied or knowledge which is stored in a device. That device you cannot say that knowledge or that device, the knowledge is a tangible asset because it is stored in a device, and you can touch, you can plug, you can just pick that pen drive, you can see that pen drive, you can hold that pen drive. You cannot say that it is a tangible asset, right? So you understand these aspects. whenever you are doing an audit, or you are doing or you are reading these intangible asset standard, you need to understand these aspects. Is it a tangible or is it an intangible asset? Robot. Friends, robot. Tell me, the robot is a tangible asset or robot is an intangible asset? The robot is a tangible asset or robot is an intangible asset? What is significant in the robot? Whether the skeleton which is there in the robot, or the program or the knowledge which is embodied in that robot. Which part is more significant? Which part is more significant? Which part is more significant, friends? Viraj is saying robot is a tangible asset. Is it a tangible asset? Preeti saying, Preeti, Munish, Mufita, they are saying intangible asset. So Viraj, if I talk about robot, probably there is a skeleton which is there in the robot, but the significant portion is the integral part, is the software, is a program which is inside that robot. Have you seen the Alexa? Alexa is not a tangible asset. Alexa is kind of an intangible asset, the artificial intelligence which is there in the Alexa, which is there in the robot, which works as per the program which is inbuilt or set up in that robot, right? That robotics. Okay. So it is an intangible asset, right? It is an intangible asset. So friends, whenever there is a tangible and intangible, like robot, you can see the robot, you can touch the robot, but the significant part is the program inside the robot. So whenever there is a mix of a tangible and intangible item, you need to see what is the main part, what is the significant part, and what is the integral part of this entire structure. Okay. In this case, robot is a intangible asset. It is not a tangible asset. In my example of software and pen drive, that entire pen drive is an intangible asset. You will not split the value of the pen drive and value of the software, right? In my example, the license is an intangible asset. You cannot split the piece of paper as a tangible and the rights as an intangible. The entire thing is an intangible asset. Friends, you bought a computer, you bought a laptop or a computer, and you got the Windows. You got the Windows with that computer, right? You got the Windows with that computer, window license with that computer. So what you will do, whether you will capitalize that as a laptop, entire laptop or computer as a laptop and computer as a PPE, or you will capitalize this entire part as a intangible asset. What you will do? What you will do? Muhammad Abdul is saying PP. Yes, you are right. So in case of a computer and laptop, this Microsoft Windows license is an integral part, or it is necessary for that computer and laptop, right? But it is not significant to the entire value of the computer and laptop. So friends, in this case, the significant part is your computer and laptop, and hence it has to be capitalized as a PPE. Okay. It should not be capitalized as an intangible asset. But when you got a ERP license or a SAP license in that laptop, in that case, that ERP or SAP license has to be capitalized as an intangible asset. Or I can say that if you got a software, for example, text filing software, which is there in your pen drive, and when you plug into your laptop, you got the software, right? So that kind of a software is transferable. That kind of a software is a separate software. It is not necessary to run that computer and laptop. That software is not necessary, right? It is a separate software. So that software can be capitalized as an intangible asset. Right, friends? So whenever there is a mix of tangible and intangible, you need to see which is more significant, which is more integral part of that. Robot is a intangible asset. It is not a tangible asset. Yeah. So friends, first of all, we discuss the physical substance. Physical substance means which you can see, which you can touch, which you can use that in that manner. Without physical substance, we know that intangible asset is without physical substance. The example of physical substance could be the building, machinery, okay? Non-monetary asset. So this part, physical substance, very simple. We have covered non-monetary asset. What is meant by non-monetary asset? First of all, a non-monetary asset are those assets which are not monetary asset. Okay. So non-monetary asset are those assets which are not monetary asset. What is monetary asset? Monetary assets are money held and assets to be received in fixed or determinable amount of money. So monetary assets are those assets in which you will get the fixed amount of money. You will get the fixed amount of money. So let me move on to the Excel file and please confirm if my Excel file is visible, guys. Whether my Excel file is visible? Is that visible? Yeah. So friends, objective and scope we have covered. So let me just write the definition here in the Excel file. Just give me a second. The definition of an intangible asset. This is the definition of the definition of an asset. And I'll write the definition of intangible asset. This we have already discussed. Let's write the definition of intangible asset. Definition of intangible asset. We have discussed the definition of intangible asset is identifiable non-monetary asset without having a physical substance, right? So without having a physical substance. So the first part, without having a physical substance, we have discussed, and what we have discussed, let me write here. Without physical substance means no physical substance like PPE are having physical existence, which we can see, touch, and hold. First example which I have taken, computer or laptop in which operating software are there. Whether entire computer and laptop will be classified as PPE or intangible asset, or it should be splitted between PPE and intangible asset. If the software is integral part of the hardware, then it will not be capitalized separately, right? Without that software, this laptop and computer will not function. It is an integral part, right? So in that case, the computer and laptop is capitalized as PPE. Robot, is it PP or intangible asset? Robot is capitalized as intangible asset, right? License given by way of a contract. In the robot, the knowledge is important. That program, the artificial intelligence is the significant part. It is important. License given by way of a contract. Is it a PP or intangible asset? License is capitalized as an intangible asset. So this without physical substance we have discussed. Now the next part which we want to discuss is a non-monetary asset. Non-monetary asset. Non-monetary asset is the asset which is going to be settled. Assets is going to be settled in a fixed unit of money. What does it mean? For example, you have sold goods for 10,000 rupees on a credit basis. What accounting entry you will pass? You will pass an accounting entry, trade receivable account debit to sales account, right? So this trade receivable, whether this trade receivable is a monetary asset or non-monetary asset. Whether this trade receivable is a monetary asset or non-monetary asset. See, there are different kind of asset, non-current asset, current asset. This current and non-current is depending upon the period of the settlement, period of the receiving, period of settlement, right? If something which is beyond 12 months, if something which is up to 12 months or within operating cycle, so that is current. Beyond operating cycle is non-current. Then the nature of the asset. When nature of the asset, I mean to say, is it a monetary or is it a non-monetary? Monetary means which is going to be settled in the fixed unit of currency. Non-monetary means which is not a monetary asset. So trade receivable, you are saying I have to receive 10,000 rupees from Mr. X. It means this asset is going to be settled into a fixed unit of money. You are saying that I have paid a loan to my subsidiary for 1 lakh rupees. It means you are going to receive a fixed amount of money of rupees 1 lakh from that subsidiary. You are saying that I have done a fixed deposit with the bank and I am going to receive 10 lakh rupees from that fixed deposit. It means you got that asset settled into a cash into a fixed unit of currency, right? Sir, we understand the monetary asset. What is a non-monetary asset? Non-monetary asset are asset which are not monetary in nature. For example, PPE, intangible asset, investment property, inventory, biological asset. Inventory, you have the inventory in your godown. You have the inventory into your godown. Can you say that I have a right to receive this much amount of money from Mr. X? Can you say that? Until and unless you will not sell that inventory, you cannot say that. So inventory is a non-monetary asset, but when that inventory will be sold on credit basis, let's say, this inventory will be converted into a trade receivable. That trade receivable will become a monetary asset. Inventory is a non-monetary asset. Property, plant and equipment is a non-monetary asset, right? You have the property, plant and equipment. You cannot say that I have a right to receive 1 crore rupees from the sale of this property, plant and equipment. You cannot say that. But when you entered into a contract to sell that property, plant and equipment, to sell that building at a value of, let's say, 25 lakh rupees or 50 lakh rupees, then you can say that I have a right to receive 25 lakh rupees because I have sold the building. So when you sold the building, what accounting entry you will pass? You will pass the accounting entry amount receivable from sale of building account debit to building account, right? So this amount receivable from sale of building is a monetary asset, but this building is a non-monetary asset. Friends, have you understood the concept of monetary asset and non-monetary asset? Have you understood the concept of monetary and non-monetary asset? Monetary items are those items you will understand. You will again read this concept in Ind AS 21, which is foreign exchange standard. Friends, again, when I talk about this monetary and non-monetary standard, monetary standard is something where you have a right to get a fixed unit of money, fixed unit of currency, which is going to be settled in a fixed unit of currency. Non-monetary asset are other than the monetary asset, as simple as that. Right? Trade receivable, loan. So these items where you know that I have to get this much amount of money, I have a right to get this much amount of money, is a monetary asset. Is that clear? Is that clear, friends? Okay, let's move on. So I have given the example of monetary asset and non-monetary asset to your Excel file. Now, friends, we understood the two legs. We understood that what is the meaning of without physical substance. We understood the meaning of non-monetary asset. Now, what is meant by identifiable? What is meant by identifiable? Right. The definition of intangible asset is intangible asset are the identifiable non-monetary asset without having physical substance. So we understood these two legs. Now let's understood what is meant by identifiable. So what is meant by identifiable according to you? What is meant by identifiable? What could be identifiable? Friends, identifiable means an asset is considered as identifiable if either it is separable or arises from contractual or other legal rights. I'll take some example, then you will be able to understand. Friends, a company has purchased a telecom license. There is a telecom company, let's say Bharti Airtel, and Bharti Airtel has purchased 5G spectrum, has purchased a 5G license, 5G telecom license from Department of Telecom, Government of India for 50,000 crores. And the company will be able to transfer this license or will be able to sell this license to the other entities as well. And the company has got this license for 20 years. So what is meant by identifiable? Standard says that an asset will be considered as identifiable if either it is separable or, it is not and, it is or. If either it is separable or it arises from contractual or other legal rights. Number one, in this case, of course, it is arising from contractual or legal right, because when Bharti Airtel is paying to the government, there is a contract between the Bharti Airtel and the government where the government is transferring this license in favor to Bharti Airtel to use for next 20 years, or Bharti Airtel can even sell this license to the different entities, right? So in this case, it is of course arising from contractual and legal right, and it is separable as well. But what is meant by separable? Separable means when the entity is capable of, lease out, rent, exchange, or sell that item separate from the entity. Means what does it mean? Means if Bharti Airtel tomorrow wants to sell this license, can Bharti Airtel sell this license? Answer is yes. If tomorrow Bharti Airtel will lease out this license to some other party, whether it will be able to do so? Answer is yes. Sir, capable of being separated or divided from the entity and sold, transferred, licensed, rented or exchanged. Capable of being separated or divided from entity, sir, what does it mean? Separable means capable of being separated from the entity. Means for selling this license, can Bharti Airtel sell this license separately, or this license cannot be separated from Bharti Airtel? Means if someone who will acquire Bharti Airtel, he will only be able to use that license. Otherwise, he will not be able to use that license. Answer is no. In this case, Bharti Airtel is able to sell this license separately, other than entity, right? Means this license is capable of being separated from Bharti Airtel. This license can be sold, exchanged, rented separately from the entity. Okay. Sir, we have not understood this very well. Can you give some more example where it cannot be separated from the entity? Yes. The second example. The company is let's say there is a company and which is into the manufacturing or which is into the trading of some textile product. Okay, some textile product. Now this company is a 30-year-old company, and with the legacy of 30 years with selling the quality product, good product at a cheaper price, this company has made a brand. This company has a goodwill. This company has a market share of more than 60%. This company has a market share of more than 60%. For example, Indigo Airlines. Indigo Airlines is operating since last 17 years. And they become a market leader with a market share of 63%. Right? Now the question arises, of course, whether this brand, whether this market share, whether this brand is an intangible asset. Answer is yes. Being a market leader, being a brand, being a having a great market share, goodwill, of course the future economic benefit is there. The company is getting more future economic benefit. But can the company sell this market share? Can the company sell this market share? Can the company sell the goodwill? Can the company sell this market share? Can the company sell the goodwill? Answer is no. The company cannot sell this market share goodwill separate from this entity. The market share will go hand in hand with the entity. If a buyer who will purchase, a buyer who will acquire the entity will get the market share. A buyer who will acquire this entity become the market leader. A buyer who will acquire this entity will get the goodwill, right? So this goodwill or market share cannot be sold, right? For example, there are 100 customers in that market and 60, we all who are live in this session, let's say we all are 60 participants and we 60 are purchasing the goods only from that entity, right? So is there any control? Can entity say that now going forward, you guys, I'm selling you guys and you guys need to, I'm selling the contract with you guys and you guys need to purchase only from that vendor? Can the company say that? Answer is no, because there is no contract. There is no contract between that customer and that entity, right? There is no contract. I mean to say the entity cannot force those customers that I have already got a premium from my competitor and now you guys need to purchase from him, right? So it is not exercisable. But if someone who will acquire this entity, this market share, this goodwill brand go hand in hand with this entity, right? So this entity will work like as it is. The only thing is the owner of the entity has been changed. How does it matter, right? How does it matter? The shop was started, the business was started by the grandfather, then it was inherited by the father, then it was inherited by son. Okay, so there were three generations who was into that business, and of course the customers used to come to that shop, the customer used to come to that business to buy the product. So this market share or goodwill cannot be separated from the entity. This market share or goodwill cannot be sold, cannot be separated, cannot be rented, cannot be exchanged, right? So hence, this market share, brand or goodwill is not separable, and hence this market share cannot be capitalized as an intangible asset. I hope you guys have understood the meaning of separable. So an asset is identifiable if it is separable. Separable means it is capable of being separated from the entity for the purpose of getting it sold, exchanged, rented, or licensed, right? So this is the meaning of the separability, or arises from contractual or other legal rights. Now, what could be this? For example, you have developed a SAP or ERP software from Oracle, right? And you got this software customized from Oracle with respect to your company, right? This software is not transferable. Means this software is not separable. This software is not transferable, not separable. This is specific to your entity only. You cannot sell this software, you cannot transfer this software because probably it will not use the other entities. This is more customized and more relating to your business. Now the question arises, sir, if it is not separable, can we capitalize this as an intangible asset? Friends, you have purchased this software, you have paid money for this software. So there is a contract between Oracle and you where Oracle will give you right to develop. Oracle will give you right to use that software. Oracle will develop the software for you. So normally in case of acquired intangible, in case of intangible asset where you have paid the money, you can capitalize those intangible assets because it is arising from contractual or other legal rights. There is a contract between you and Oracle, right? So in that case, the identifiability criteria is met. Normally, whenever you are paying some money to buy some intangible asset, so this identifiability criteria is rebuttable presumption. It is met. It is considered as a met. Why? Because whenever you are purchasing, either there is a contractual or legal right will be there. Is that clear? Is that clear, friends? Is it clear or not clear? Yes, it is clear. So on that monetary and non-monetary, Preeti is asking, sir, but we can determine the value of the building. So Preeti is asking, sir, you have said that building is a non-monetary asset, but we can determine the value of the building. Preeti, everything has a value, first of all. If something which is not having a value, which is something which is not expressed in the monetary terms, you cannot do the accounting, right? So the basic condition is accounting can happen only for the item which can be expressed in the monetary terms, right? Number two, when I'm talking about monetary and non-monetary item, you have to look at the general feature of that item. When I'm talking about building, am I saying that yes, I will be receiving 1 crore rupees from the sale of this building? Do I have a contractual right to receive that money? I know the value. So I know the market value of the building is, let's say, 1 crore rupees. Tomorrow, when I am going to sell that building, it could be 90 lakh, it could be 1 crore, 10 lakh. So do I have a right to receive the fixed unit of money? Do I have a right to receive the fixed unit of money? But in case of a debtor, you can say that, sir, I need to receive 50 lakh rupees from Mr. X. In case of PPE, can you say that I have to receive 1 crore from Mr. X? You haven't entered into a contract to sell. आपने तो अभी तक सेल किया ही नहीं ना, आप तो यूज कर रहे हो बिजनेस में. दैट इज व्हाई इट इज अ पीपी, right? But the moment you enter into an agreement to sell that building, you have sold that building, and when there is a money is receivable, you will say that with the confidence, इससे मुझे 50 लाख रुपए आने, इससे मुझे 1 करोड़ रुपए आने. You can say with the confidence, right? Why? Because it is a receivable, it is a monetary asset which has to be settled into a fixed unit of money, into a fixed unit of money. Is that clear, Preeti? So what is meant by intangible asset? An intangible asset is an identifiable non-monetary asset without having a physical substance. Identifiable non-monetary asset without having a physical substance. Fourth example, a government, and I want the answer from your side. A company has got a license from the government of India. For example, broadcasting license. Let's say, what could I say? In the World Cup is going on, right? And Disney Hotstar has got a broadcasting license from the BCCL. So the Disney Hotstar has got a broadcasting license from ICC, or let's say this BCCL. And the contract between this cricket association and Disney Hotstar is like, they cannot transfer this broadcasting license to anyone, right? So they got this broadcasting licenses to broadcast all the cricket matches in their OTT platform. Now this broadcasting license, they cannot lease out, they cannot rent out, they cannot sell, they cannot exchange, right? My question to you guys is it an identifiable asset? Whether Disney Hotstar will capitalize this broadcasting license as an intangible asset in their books of accounts. Of course, they have paid a huge premium. They have paid a huge amount to acquire these broadcasting licenses. My question to all of you, whether this broadcasting license, where they are getting a right to broadcast the cricket matches in their OTT platform, whether this broadcasting license is an identifiable asset. Is it an identifiable asset? Sonia is saying yes. Ritvik is saying yes. Rahul is saying no. Munish is saying yes, it is an intangible asset. Why, Munish? Why it is an intangible asset? So what about others? Quickly. Abdul is saying no. Mufita is saying yes. Bhaskar is saying non-monetary. Non-monetary, yes. Non-monetary is there, without physical substance is there. As they cannot sell only match time, no, as it is having a short time. So Bhaskar, forget about short time. Forget about that. For example, they got the broadcasting license for to broadcast all the cricket matches, not restricted to World Cup, for all the cricket matches for the 3 years, next 3 years, right? Next 3 years, let's say. In that case, whether it is a intangible asset or not. Sarvanan is saying, yes, sir, it is arising from contract. You are right. You are right, Sarvanan. So guys, as I have told you, an asset will be considered as identifiable when it is separable, or or it is arising from contractual or other legal rights. So this Disney Hotstar is getting this license to broadcast, which is arising out of contractual or legal rights. If this cricket association will also give the license to other party, probably Disney Hotstar will sue the cricket association that how come they give this license to others as well, right? Because there is a non-competing agreement and there is an exclusive contract with Disney Hotstar that Disney Hotstar will broadcast all the matches of the World Cup or the other cups as well. So friends, in case where the asset is arising from contractual or legal rights, means when the company is acquiring the asset, purchasing the asset, paying the money, in that case, this identifiability criteria met. It is arising from contractual or legal right. It is met, right? It is met. Is that clear? Is that clear, friends? This identifiability criteria is a rebuttable presumption. Okay. So it is not and. So first of all, you guys need to understand it is not and, it is not plus, it is or, right? It is not and, it is or. Either it is separable or it is arising from contractual or legal rights, right? And why in the definition this separable was added? So that because intangible is a very sensitive kind of a matter, right? Because if you can see something, you can touch something, you can prove that we will have a future economic benefit. You will have a future economic benefit. Something which you cannot see, you cannot touch, you cannot hold. How will you prove the future economic benefit? So that the entity will not start playing, right? If just they will not inflate their balance sheet. That is why the concept of separability comes into the picture, right? For example, market share. There are so many market leaders. Pidilite, who are manufacturer of Fevicol, they are the market leaders. Okay. There are so many companies, Asian Paints, they are market leader. There are so many companies, Indigo Airlines, they are the market leader in aviation. So there are so many companies who are the market leaders, right? They capture the market so that they will not, and of course, if they are the market leader and if they want to sell their business, their valuation is much higher than a company who is into the number 3 or number 4 in the list, right? जिसका मार्केट शेयर ज्यादा है उसकी वैल्यूएशन भी तो ज्यादा होगी ना, जिसका कस्टमर बेस ज्यादा है उसकी वैल्यूएशन भी ज्यादा होगी. So of course there is a valuation of that market share, that goodwill, that brand, right? So friends, assets तो वही है, एसेट्स तो फिजिकल एसेट्स तो वही है ना, बट वैल्यू किसकी ज्यादा है? इंटेंजिबिलिटी की वैल्यू ज्यादा है. जोमेटो, what is Zomato is a loss making company, but the valuation of Zomato reaches to 1 lakh crore. Why the investor is paying a huge amount of money into the Zomato, considering even it is a loss making entity? So the assets of the Zomato does not worth 1 lakh crore, right? Assets Zomato के 1 लाख करोड़ के नहीं है. उबर, उबर के एसेट्स 1 लाख करोड़ के नहीं है. उबर के एसेट्स नहीं है, बिकॉज उबर ये जितनी कार चलाता है, उबर इज फैसिलिटेटिंग और उबर इज गिविंग अ प्लेटफॉर्म, a portal where this entire arrangement can happen. The assets belong to those drivers, those owners, right? But valuation of Uber is into lakhs and crores. So friends, the value of the tangible asset may not be much more. The value of the intangible is much beyond that, right? So that the company will not start playing and will not start capitalizing the intangible asset which for which they are not paying for, right? So the company will not say कि मेरी वैल्यूएशन तो मेरे मार्केट शेयर की वजह से 25,000 करोड़ ज्यादा है, so I will capitalize 25,000 crore in intangible asset on the asset side, and I'll took this as a reserve in the liability side, so that my entry will balance intangible asset account debit to reserve account, right? Since I have not paid any amount for that. Friends, that is why this separability criteria comes into the picture, right? Whenever you are paying, of course, one asset you have paid a cash, then you are getting some asset. And of course, when you are purchasing some asset, there is a future economic benefit forcing to it, right? In that case, there is no any problem to capitalize your intangible asset. But when you are not paying anything, in that case, you need to check whether separability criteria is there or not. Is that clear? Is that clear? Ravish has also said identifiable but cannot be separated. You are right, Ravish. It is identifiable. Why? Because it is arising from contractual or legal right. It is actually purchased asset. Very good. Friends, I hope you are able to understand this entire definition of intangible asset. Have you understood this definition of intangible asset? Please tell me, have you understood this entire definition of intangible asset? Yeah, very good. So let me take you again on the Excel file. And please confirm if the Excel file will be visible. Yes. I hope this Excel file is visible. So friends, identifiable we discussed. An asset is considered as identifiable when it is either separable or arises from contractual or legal rights. Separable means capable of being sold, rented, licensed, exchanged, or exchanged separately from the entire business or entity. For example, market share will not be considered, will not be recognized as intangible asset because it is neither arises from contractual legal right nor it is separable. Reliance Communication have purchased a telecom license from Government of India. Even though it is not transferable, still it is recognized as an intangible asset. Why? Because it has paid, it has purchased, right? It is arising out of legal or contractual right. Is that clear? This part we have covered. Shall I move forward to the next part? Yeah. So let's quickly do this identifiability of intangible asset case study. Let's discuss this. Pluto Limited intends to open a new retail store in a new location in the next few weeks. Pluto has spent a substantial sum on a series of television advertisements to promote this new store. Right. The company has paid an amount of rupees 8 lakh for advertisements before 31st March. 7 lakh of this sum relates to advertisements shown before 31st March and 1 lakh to advertisements shown in April 2001. Since 31st March 2001, the company has paid for further advertisement costing rupees 4 lakh. Pluto Limited is of the view that such cost can be carried forward as an intangible asset since market research indicates that this new store is likely to be highly successful. Please explain and justify the treatment of the above cost in the financial statement for the year ended 31st March 2001. Friends, this question is on advertisement, right? When the company is incurring the advertisement expenses, right? And it is saying that the company has paid an amount of rupees 8 lakh for advertisement before 31st March 2001. 7 lakh of this sum relates to advertisement shown before 31st March 2001 and 1 lakh to advertisement shown in April 2001. Since 31st March 2001, the company has paid for further advertisement costing rupees 4 lakh. कंपनी ने 8 लाख रुपए पे किए. 8 लाख में से 7 लाख रुपए 7 लाख रुपए का एडवर्टीजमेंट 31 मार्च से पहले ब्रॉडकास्ट हुआ, उससे पहले दिखाया. 1 लाख रुपए का एडवर्टीजमेंट उसके बाद दिखाया. कंपनी ने एडवर्टीजमेंट एक्सपेंस किया. क्यों किया? जस्ट टू प्रोमोट इट सेल्स, राइट. 31 मार्च के बाद कंपनी ने 4 लाख रुपए का खर्चा और किया. नाउ द क्वेश्चन इज, can this advertisement expenses can be capitalized as an intangible asset? Can the advertisement expenses be capitalized as an intangible asset? Yeah. Although you have paid, but when you have paid, whether someone is guaranteeing you for the future economic benefit, probably you have, promoted yourself. You have put the big hoardings, you have put the advertisement on the newspaper. It may be possible that no any customer will come to you, right? It may be possible that no any customer will come to you. So have you Have you entered into a contract with that advertisement company that you will get so much of future economic benefit? Yeah. So future economic benefit is not certain. So in case of advertisement expenses, it cannot be capitalized as an intangible asset. Standard says that. Ind AS 38 says that. Standard says that the advertisement expenses cannot be recognized as an intangible asset. There is a specific prohibition which is given in the standard, right? So it says that intangible asset can only be recognized if they are identifiable and have a cost which can be reliably measured, right? Which can be reliably measured. These criteria are very difficult to satisfy for internally developed intangibles. For these reasons, Ind AS 38 specifically prohibit recognizing advertisement expenditure as an intangible asset. The issue of how successful the store is likely to be does not affect this prohibition. Therefore, such cost should be recognized as an expense. However, the cost would be recognized on accrual basis. Therefore, the advertisement paid before 31st March 2001, 7 lakh would be recognized as an expense and 1 lakh as a prepaid expense, right? The 4 lakh cost of advertisement paid for since 31st March 2001 would be charged as an expense in the year 31st March 2002. Guys, this advertisement cost has to be treated as a cost. It has to be treated as an expense, right? This advertisement expenses cannot be capitalized as an asset. Okay, this cannot be capitalized as an asset, right? Is that clear? Is that clear, friends? Friends, for recognizing any intangible asset, there are three aspects, important aspects. Number one is your identifiability, which we have discussed. Identifiability means separability or arising out of contractual or legal right. Number two is control, right? Since the intangible asset is something where you cannot take a possession, like a building, a flat or a house, you can take a possession. But for intangible asset, you cannot take a possession. So that is why for intangible asset, this control aspect becomes very important. And when you read the recognition condition, you will find one thing, right? You will find one thing. In this recognition criteria, two criteria are pretty simple. An intangible item, an intangible resource is going to be recognized as an intangible asset when future economic benefit is probable, when cost can be measured reliably. And the third one is it meet the definition of intangible asset. It meet the definition of intangible asset means identifiable non-monetary asset without having physical substance. Identifiable non-monetary asset without having physical substance. Okay. So friends, for being an intangible asset, apart from identifiability, you must meet the definition of control as well, right? So for intangible asset, three aspects are very important. Number one, identifiability. Number two, control. Number three, future economic benefit, right? So if the future economic benefit is not probable, of course, you will not recognizing any item as an asset. Okay. So future economic benefit is very important. Your identifiability in this case is very important. And the control aspect is very important. What is meant by control? Friends, standard says that the control generally arises out of the power. Control means the power which will give you the future economic benefit or stop others by accessing the future economic benefit. Friends, you have seen Sonu Nigam, you have seen so many authors, musician, lyrician, right? So they are getting the copyright of their lyrics. They are getting copyright for their lyrics. Musician are getting the copyright for their music, right? These big brands, they are getting the trademark for their logo, right? McDonald's, you have seen that logo for the McDonald's, you have seen the logo for Indigo, you have seen the logo for Bharti Airtel, right? So these logos are trademarks because these are the face of these brands, these are the face for these companies, right? These authors, these companies are getting the patent of their formula, right? So if I talk about this trademark, patent, copyright, so what is the benefit of these things? What is the benefit of this trademark? What is the benefit of this copyright? What is the benefit of this trademark, patent, and copyright. Tell me, by these things, by patent, trademark, or copyright, whether you will get the future economic benefit? Answer is no. Whether your sale will increase? Answer is no. Then what is the benefit of getting something as a trademark, or getting something as a copyright, or getting something as a patented? What is the benefit out of it? So Preeti is saying that the benefit is other cannot use, other will not be able to use. You are right, Preeti. Although if I have written a book on Ind AS, let's say, right? So my book is there, a treatise on Ind AS is my book. For example, if I have written this treatise on Ind AS book, so the copyright is with me, right? The copyright is with me. Of course, by this copyright, my sale will not increase, but I will restrict others. I will stop others by copying that content. Sir, how will you stop others? For example, if myself as a student, I want to copy your I want to copy your content, I can copy your content. So that will be considered as a chori. That will be considered as a theft. That will be considered as a stealing. So I can sue you. I can take you into the litigation if I will find that you have copied my content. And that is why you must have seen that some songs are there on YouTube, some videos are there on YouTube. You will see those videos, and you will see those videos, you will see those songs. Subsequently, you will find that these songs or videos are not available. Why? You will see the content that this is copyright, and hence it cannot be published, it cannot be played. Okay, so it will not be there on the platform. So what does it mean? It means that the control does not mean only to get the future economic benefit. Control generally gives you the future economic benefit, but it also stops, it has a power to stop other to accessing the future economic benefit from your intangible asset, right? And of course, when the Sonu Nigam find that someone is copying his content or music or lyrics, probably he will sue that person and he will demand a compensation for that, right? I hope you guys have understood the meaning of control as well. So an entity controls an asset. Generally, if the entity has a power to obtain the future economic benefit or restrict the access to future economic benefit of others. Generally, in case of a control, generally the company has a power obtained by the legal rights. Okay. In the absence of legal rights to protect, an entity usually has insufficient control over the expected future economic benefit. If I have not get the copyright of my content, probably if someone will copy my content, I cannot sue him. Example, a team of skilled staff, customer relationship and loyalty. For example, if I have provided the training to my staff, if a company has given a training on Ind AS, GST to its staff, whether, of course, by providing the training, the efficiency of the staff will go up. The company has spent around 1 crore rupees on the training on Ind AS, training on communication skills, training on soft skills, training on GST. Of course, the efficiency will go up. But whether the company control the staff, probably if the employee who has taken the training, who has attended the training, if he wish to leave that company and join another company, can the company stop him? The answer is no. The company cannot stop him. Sir, but the company has the notice period. So it doesn't matter. The employee will serve the notice period and he will go. And even though if the employee will not, if the employee don't want to serve the notice period, the company cannot stop him. The company can only do one thing, that the company will recover the notice period pay. The company will claim the amount from the employee that you need to pay this much amount since you have not served the notice period, right? So for employee, you cannot say that there is a control with the employee. I'm controlling employee, and that is why the expenses which I've incurred on training, it will have a future economic benefit. and I need to capitalize this as an intangible asset. Yes, there could be a future economic benefit, but there is no control. There is no control. There is no contractual thing where you will say that you will not be able to leave the company in the next 5 years. They will be able to leave the company, right? Company XYZ Limited has provided training to staff on various new topics like GST, IFRS, Ind AS, etc. to ensure the compliance as per the required law. Can the company recognize such cost of staff training as an intangible asset? It is clear that the company will obtain the economic benefit from the work performed by the staff as it increases their efficiency, but it does not have control over them, right? Because staff could choose to resign the company at any point of time. Hence, the company lacks the ability to restrict the access of others to those benefits, right? So this employee has learned Ind AS and GST here, but he will perform in the next company in which he is joining. Therefore, the staff training cost does not meet the definition of an intangible asset, right? I have told you the three aspects. Number one is identifiability, we discussed. Number two is controlled. Number three is future economic benefit. What is meant by future economic benefit? Of course, increasing revenue is a future economic benefit. Not only increasing revenue, rather cost saving is also a future economic benefit, right? For example, the company has incurred some expenses, right? And due to those expenses, the company has done some research and development. And due to those developments, those research, the company has been able to reduce the production cost by 10%, right? Reduce the production cost by 10%. So again, that thing can be capitalized as an intangible asset because although revenue is not there, but the cost saving is there. So cost saving is also considered as a future economic benefit or other benefit resulting from the use of the asset, right? For example, as I told you, by patent, copyright, or trademark, there may not be a direct benefit. There may not be a cost saving. There may not be a revenue, but there are some other benefit resulting from the use of the asset. What could be the other benefit? The other benefit could be the monopolistic situation. When you have copyright, you will be able to provide that content only, right? And probably at a later period of time, if you want to sell that content, you can sell that content, or you can enter into an agreement and you can say that you can use my content to publish in your name, but I need 50 lakh rupees for that, right? So other benefits may be there. Okay. So this is the meaning of future economic benefit. Future economic benefit does not mean only increase in sale. It may lead to a saving in cost as well, right? Right, friends? So, friends, it's 8:22 now. Let's have a 5 minutes break. It's 8:23 rather. So we will start at 8:28. Okay, after 5 minutes. intangible asset. Friends, for all the assets, two criteria will always be there. Always remember these two criteria will always be there for all the asset. Number one, cost should be measured reliably. You should be aware about the cost. If you don't know the cost, how will you measure? How will you capitalize? How will you recognize, right? So cost can be measured reliably. Number two, future economic benefits should be probable. Future economic benefits should be probable. Cost can be measured reliably. Most important is number three, which is meet the definition of intangible asset. Let's say if this criteria would not have been there, if this criteria would not have been there, only these two criteria would have been there. So going by these two criteria are cut, copy, paste from Ind AS 16, right? Same criteria is there in Ind AS 16 as well as in Ind AS 38 as well, right? So probably someone will get confused. If this third criteria would not have been there and I purchased a mobile and I was just looking at a recognition condition, right? So the recognition condition in Ind AS 16 is future economic benefits should be probable and cost can be measured reliably. Same recognition condition in Ind AS 38 is future economic benefit and cost can be measured reliably. I'm a bit confused whether this mobile is a tangible or intangible asset, right? But when I go to this thing, the third criteria in intangible asset, I found, oh, this standard only talks about the identifiable non-monetary asset. This mobile is identifiable asset. This mobile is a non-monetary asset, right? So PP, intangible, both are non-current, both are non-monetary, right? Both are identifiable. But in the definition, the last leg is without physical substance. This mobile has a physical substance, right? So future economic benefit is probable. Yes. Cost can be measured reliably. Yes. Whether it meet the definition of intangible asset means whether it is something which is without physical substance. Is it identifiable? Is it non-monetary? Is it having a physical substance or not having a physical substance? If it is not having a physical substance, then it will be recognized as an intangible asset provided future economic benefits should be probable and cost can be measured reliably. Right, friends? Right? Students, do you have any doubts so far? Raj, Vish, T, Nisha, Mufita, Munish, Rahul, Ritvik, Mansha, Sarvanan, Shankara. Do you have the any doubt so far? We have covered the 50% of the session. Any doubts so far? Good. You all are good? Okay. Okay, guys, let's move on. Now, friends, we understood the recognition part. Now we are moving to the measurement part. And intangible asset has to be measured at cost. Okay. But in case of intangible asset, one thing is very important, that how you acquire the intangible asset. How you got the intangible asset, that is very important. How you got the intangible asset. That part is very important. Number one, sir, how can the intangible asset be acquired? And these kind of or mode of acquisition will give you the accounting for intangible assets. Number one is separate acquisition. Number one is separate acquisition. Separate acquisition means I went to the Tally, which is a company, Tally Solutions Private Limited, and I told that company that I need 5 license for using the Tally. So they said, okay, please pay us 1 lakh rupees and we will give you the license. Okay. So there could be a case of a separate acquisition. Okay, separate acquisition. Right? So when someone is buying a software, someone is buying a license, someone is buying some rights, someone is buying some intangible asset by paying a money. So it is known as a separate acquisition. Part of a business combination. An entity is acquiring another entity. And by acquiring another entity, the entity is getting some intangible asset. So it is a part of a business combination. Number 3, government grant. The government is giving some licenses free of cost to the entity. So of course it is by way of a government grant. So this intangible asset may arise by way of a government grant. Internally generated goodwill. Internally generated goodwill. This intangible asset may be a internally generated goodwill, but friends, internally generated goodwill is not allowed to be capitalized because it is not meeting the criteria of identifiability, right? This goodwill cannot be separated from the entire entity as a whole. And this goodwill is not a purchased goodwill. It is an internally generated goodwill. Clear? Internally generated intangible assets, sir. There could be a case of internally generated intangible asset. What could be those cases? We will discuss. And what are the criteria for capitalizing the internally generated intangible asset? We will discuss that criteria as well. Then there is an exchange of assets. Like we discussed in Ind AS 16, a company is transferring its building and company is getting a software or a license, right? So there is a case of exchange of asset. Exchange of a non-monetary asset in lieu of another non-monetary asset, or exchange of combination of monetary and non-monetary to acquire a non-monetary asset, right? So these are the 6-7 cases which we are going to discuss in detail. These are the 6-7 cases which we are going to discuss in detail, right? That how the accounting, how the measurement will happen in these kind of cases. Friends, first of all, we'll discuss about the cost of an asset in case of an acquisition, in case of a separate acquisition. You remember in our PP, we discussed 3 leg of it. Number 1, there were 3 leg of cost in PP. Number 1 was purchase price, including import duties and non-refundable taxes, right? After deducting discounts and rebates. Then there was a directly attributable cost. You remember I have given an example of the machine which you are buying from China. There is a transportation, freight inward, site preparation cost, installation cost, assembly cost. You remember I have taken some example, professional fee, trial run expenses, right? Directly attributable cost. Then there was a third item. You remember that third item in case of PP? Do you remember that third item in case of PP? Yeah. Rahul is saying, sir, it was a dismantling cost. Estimated cost of dismantling. You're right, Rahul. Estimated cost of dismantling was there. You remember I told you, if you have constructed a building on a leasehold land and landlord says that, the lessor says that after 20 years you need to give me the land in the same condition in which I have given it to you. It means you have to demolish that building, you have to clear that building, there will be a dismantling cost of that building, decommissioning cost of that building, and the estimated, the present value of the future dismantling cost has to be capitalized as a part of the cost of the asset, right? It has to be capitalized as a part of the cost of the asset, right? So friends, but this third item is not there in intangible asset. Why? This third item is not there in intangible asset. Why? The third item is not there in intangible asset because intangible asset does not have a physical substance. If something which does not have a physical substance, how you will be demolish that? There will no any cost for demolition, right? If something which is not physical in substance, how you will remove the substance of that? Okay, so there will not be any decommissioning cost. So that is why in intangible asset only 2 things are there, which is cut, copy, paste from Ind AS 16 standard. Purchase price, including import duties and non-refundable taxes after deducting discount and rebates. The second one is directly attributable cost of preparing the assets for its intended use, right? Number 1, purchase price. If there is any import duties that you have to pay, if there is any refundable purchase taxes, right? Non-refundable purchase taxes, For example, GST. If GST is refundable, you can take the input credit of GST. In that case, you will not capitalize that GST part. But if you will not be able to get the input credit on GST, you have to capitalize that GST as a part of the cost of the asset, right? The second one is directly attributable cost. Okay. So these are the two aspects of cost of intangible asset. Now, what are the costs which is going to be included? Cost of employee benefits, professional fees, cost of testing, right? If there is a employee benefits cost, salary cost, which is involved in the intangible asset, in that case, that employee benefit cost is going to be capitalized. The professional fees is going to be capitalized. The testing cost is going to be capitalized. What is the cost not included? Same like PP. Launching a new product like advertisement and promotional expenses, training expenses, administrative and general overhead expenses, right? So these are not capitalized. Okay, these are not part of your intangible asset. This is same what we have read in Ind AS 16. Friends, do let me know if you have any doubt so far on this cost part. If you have any doubt so far in the cost part? So let's discuss this separate acquisition case study. And before that, let's quickly do this deferred payment credit also. The same concept of deferred payment credit was there in the Ind AS 16 as well. What is meant by deferred payment credit? For example, a company which is buying a software from Tally Solutions, and Viraj is leading a company. Viraj goes to that company, Tally, and Viraj told that I need a latest version of Tally software where the audit trail is also there. The company said, okay, the price is rupees 1 lakh, and Viraj paid upfront and he got the license of Tally, user license of the Tally. Now, subsequently, what happened? I'm also leading a firm and I also require a Tally license. I went to the Tally Solutions and I told that the same license I need, which you have given to Viraj. He said, okay. But I told that company, I don't have money right now. I will give you the post-dated check, right? I'll give you the post-dated check. And I will be able to pay you only after 1 year, right? Only after 1 year. Then Tally told me, okay, the cost of the software is 1,10,000. 1,10,000. Then I told them that, but you have given this software to Viraj at a cost of 1 lakh only. They told that Viraj has paid me upfront, but you will be paying me after 1 year. So there is a time value of money. There is a time value of money. Since Viraj has given me the funds right now, if I'll deposit that fund into the bank, I will get a 10,000 rupees of interest in 1 year, and you will be paying me after 1 year, right? So although I am selling goods to you, but I am not able to use the money for the next 1 year because you are not paying me. And I can use the money which Viraj has given to me. I can use that money in my business. So friends, standard says that if payment for intangible asset is deferred beyond normal credit terms, in that case, the cost of intangible asset is the cash price equivalent at the recognition date. You need to capitalize the intangible asset at a value equivalent to the cash price. Okay. What should be the price if it has to be sold within the normal credit terms, right? Sir, we understand that this 1 lakh and 1,10,000 we understand, but actually I'm paying 1,10,000 and the cash price equivalent is 1 lakh. Sir, where the 10,000 rupees will go? Where the 10,000 rupees will go? Standard says that the difference between the price paid, the difference between the price paid and cash price equivalent, the difference between the price paid and cash price equivalent has to be recognized as an expense, has to be recognized as an interest cost. It has to be recognized as an expense in the profit and loss account. Sir, whether it can be capitalized, it can be capitalized if that asset is a qualifying asset, and that capitalization should be as per which standard? It should be as per Ind AS 23. The capitalization should be as per Ind AS 23, right? It should be as per Ind AS 23. Same concept what we have discussed in Ind AS 23. We have discussed in Ind AS 16. Okay. Guys, do you have any doubt? Because I am entering into the practical problems. I am entering into the solving the measurement part, the practical part of it. Let me know if you have any problem, any doubt so far. Please do let me know. No doubt? Okay. So quickly discuss this case study. OBCINC, so this is the name of the company, acquired a software for its internal use, costing rupees 10 lakh. This is the purchase price. The amount payable for the software was 6,000 rupees immediately, 6 lakh rupees immediately, and 4 lakh in 1 year's time. So the company is paying 6 lakh upfront. 4 lakh the company is going to pay in 1 year. Other expenditure incurred were purchase taxes, 1 lakh rupees, right? So this purchase taxes is 1 lakh rupees and nothing, and no any information is given in this question. So we will assume that this purchase tax is a non-refundable tax. We will assume this purchase tax is a non-refundable tax, right? We'll assume that. So it will be added to the cost of the intangible asset. Entry tax is 10%, but it is recoverable. It means the input credit can be availed. So this will not going to be capitalized, right? Legal fee is 87,000. So the legal fee paid for acquisition of this software is 87,000. The legal fees is 87,000. Consultancy fee for implementation, it is a directly attributable cost. It is a directly attributable cost. So it is 1,20,000. Again, it will form part of the cost of the asset. OBC INC cost of capital is 10%. I don't know why this cost of capital is given. Why? What is the need for this 10%? I don't know. Guys, please tell me what is the cost of the software on initial recognition using the principle of Ind AS 38 intangible asset. I'll give you 30 seconds. Okay. I'll give you 30 seconds. Anisha, I hope the question is clear to you. So cost of capital, Ridvik is saying, sir, cost of capital is used for discounting that 4 lakh rupees. Yes, you are right, because this 4 lakh is going to be paid after 1 year. So friends, this cash was paid at 6 lakh rupees. This is the purchase price. Again, this deferred consideration 4 lakh is going to be payable after 1 year. And what is the present value of this 4 lakh? 363,636. The purchase tax is 1 lakh rupees. Entry tax is a refundable tax and hence it is not capitalized. Legal fee of 87,000 is there. Consultancy fee of implementation of 1,20,000 is there. So this is the total cost which is going to be capitalized at 12,70,636. This is the total cost which is going to be capitalized. Okay. Total cost which is going to be capitalized. 12,70,636. I hope it is clear to all of you. Raj, is it clear? Mufita, Ravish, Munish. So we understood the concept of separate acquisition, where we have understood that it has to be measured at cost, which is purchase price plus import duty plus non-refundable taxes minus discount and rebates plus directly attributable cost. Okay. To bring the asset in the location and condition intended for use. Right. Now let's move to the second part, acquired in a business combination. Acquired in a business combination. Means if a company is acquiring another company, and let me give you an example here to make you guys more understand this concept. Let's say there is a company And if I talk about the tangible asset value of that company, it is, let's say, 10 crore rupees. But this company has a very old company and a market leader in the product which it is selling to the customer. Market leader. So friends, if this company is a market leader, although the infrastructure, the asset which this company is having, the market value of the asset is 10 crore only. But whether the valuation of the business is also 10 crore? Whether the value of the business is also 10 crore? Answer is no. Of course, it is beyond the value of the tangible asset. Why? Because of the premium someone will get. If someone will buy this company, someone will get the market share in the legacy, or someone will get the goodwill in legacy, right? So let's say if today someone is acquiring Maruti Suzuki India Limited. So Maruti is known for its distribution network. Even in the small village, you will get a Maruti repair workshop, right? But if I talk about Skoda, if I talk about let's say BMW, Volkswagen, if I talk about this what should I say? This car, I forgot the name of this car. MG Hector or MG, right? So you will not find the service centers or workshops or repair shops for these kind of brand. But for Maruti, you will get everywhere. Even a small mechanic will be able to repair the problem in the Maruti car. Now the question arises, let's say the value of the Maruti, if someone will acquire Maruti, of course, he wants to give a premium. Why he wants to acquire a Maruti? He wants to acquire a Maruti for its distribution network, right? Because by acquiring a company, he is getting a distribution network all across India by acquiring this company. So that is why he wants to pay the premium. He wants to pay the premium. Okay. Or as simple as that, if someone who is a rank holder chartered accountant, the company is paying some premium for the rank, right? If there is a rank holder CA, he will be getting 10 lakh rupees in a normal company upfront. If there is a normal CA means who does not have a rank, probably he will be getting 8 lakh or 8.5 lakh. Okay. So there is a difference of 1 or 1.5 lakh. Why? Because why the company wants to pay a premium of 1 lakh or 2 lakh rupees to a rank holder? Because he has secured the rank. It means his knowledge level, his value is more than the other one who does not have a rank. So there is a presumption. I'm not saying this is good in all cases. I have seen the rank holders who also got failed. Failed means the rank holder who were not able to perform in corporates or perform in a real life. So I'm not going on that. I'm just giving you the concept with the help of the layman language examples, right? So one thing is very clear. When someone is acquiring a business, it cannot be cost. It cannot be cost. Why? Because someone will not pay the cost. Someone will pay the fair value. Am I right? Again, giving you more example. Let's say in my company, there is a land and I have purchased the land in Delhi 50 years ago. So standard permit me to apply cost model. And 50 years ago, I purchased that land at 10 lakh rupees. Still, it is coming into my books of accounts at 10 lakh rupees. But the current market value of this land is 50 crore rupees. Right? So the land which is there in the company, in the balance sheet, it is coming at 10 lakh rupees. But the current market value of this land is 50 crore rupees. Do I need to sell this business or sell this company, assuming this company has only land? Will I sell this company at 10 lakh rupees or considering 50 crore rupees? Of course, the business will be sold at fair value, right? Business will be sold at fair value. It will be sold at fair value, right? So friends, in case of a business combination, standard says that whenever you are acquiring a business, a company is acquiring a business and the company is getting an intangible asset, it has to be valued at the fair value. It has to be measured at fair value, right? So intangible asset is recognized separately from goodwill if fair value is measured reliably, and even if those intangible asset has not been recognized by the acquirer in its books. What it says that, although you will discuss this concept in detail in Ind AS 103 business combination standard, but just to speak now, in case of my example of Maruti Suzuki India Limited, why someone will want to pay a premium? Someone will wants to pay a premium of a distribution network, right? So this distribution network can be capitalized as an intangible asset in the books of the acquirer, right? In the books of the acquirer. Why? Because the acquirer is purchasing that intangible asset. Acquirer is paying a premium. Acquirer is paying for that intangible asset, right? So let's understand this example, this business combination with the help of a case study. On 31st March 2001, Earth India Limited paid 50 lakh rupees for 100% interest in Sun India Limited. What is the purchase consideration? What is the purchase consideration? The purchase consideration is how much? Purchase consideration is 50 lakh. And 100% interest is acquired. At that date, Sun Limited's net assets had a fair value of rupees 30 lakh. Sun Limited net asset had a fair value of rupees 30 lakh. In addition, Sun Limited also held the following rights, right? So the company has paid a purchase consideration of 50 lakh rupees. The fair value of the net assets is 30 lakh rupees, right? And the company also held the following right. The acquiree also held the following right. So in addition to the capitalized asset in the books of accounts, the acquiree has some rights also. And of course, the acquirer might be paying a value to that, to those assets, those intangible assets, which has not been recognized in the books of the acquiree. Trademark named Grand, valued at rupees 1,80,000 using a discounted cash flow technique. So this company has a trademark, okay? And the fair value of this trademark is 1,80,000 rupees. The company has a sole distribution right to an electronic product. The company has a sole distribution right of an electronic product. No one else can sell that product. Right? So the company has a sole distribution right. Future cash flows from which are estimated to be rupees 1,50,000 per annum for the next 6 years. The company has a sole distribution right to an electronic product, and the future cash flow from which are estimated to be rupees 1,50,000 per annum for the next 6 years. And the company is expecting that I will be able to receive 1,50,000 rupees per annum for the next 6 years. 10% is considered to be an appropriate discount rate. The 6-year 10% annuity factor is 4.36. Right? So 10% is a discount rate. 6-year 10% annuity factor is 4.36. Calculate goodwill and other intangible asset arising on acquisition. First of all, in this case, what is my purchase? What is my purchase consideration in this case? My purchase consideration is how much? 50 lakh rupees. What is the value of the net assets acquired? It is 30 lakh. What is the value of trademark? The fair value trademark is 1,80,000. What is the value of distribution right? 1,50,000 per annum. Multiply by annuity factor of 4.36. It will give the value of 6,54,000. The total value of the assets acquired, including intangible asset, is 38,34,000. So the remaining extra premium will be classified as a goodwill. Goodwill on acquisition of the business is 11,66,000. Right? This is the amount which is there for the goodwill. Friends, do let me know if you have any question on this part, on the business combination, on the acquisition of intangible asset by way of a business acquisition. Please do let me know if you have any question in this aspect. Please let me know. Friends, are you able to clear on this? I'm waiting for the response. I'm waiting for the response. Are you clear on this? So we have covered the accounting for separate acquisition when you are acquiring an intangible asset. We have also discussed the accounting of measurement of, when you are acquiring intangible asset by way of acquiring a business. Okay. So acquisition of intangible asset by way of business combination. Munish is asking distribution right calculation. So Munish, in this case, by the sole distribution right, the company will receive 1,50,000 rupees every year. 1,50,000 rupees every year, right? For next 6 years. So today, when I am buying a business, when I am buying a company, right? And that company has an asset, and that asset will give me future economic benefit for next 6 years. So how will I compute the value today? And let me show you this thing on the Excel file. Let's say if I'll get 1,50,000 rupees every year, right? So year is 1, 2, 3, 4, 5, 6. I'll receive 1,50,000 rupees every year revenue. What is my present value factor if discount rate is 10%? 1 divided by 1.1, can I say that? Just divide by 1.1, right? This is there. The total is my present value factor. So if I'll multiply this, what is the present value for the next 6 years revenue? I have got value as 653,289. 653,289. You can see here 653,289, or I can say that 6,54,000, whatever. Right? Or simply what I can do, 1,50,000 multiply by, let's say, 4.36. If I'll multiply, I'll get the same value. So it's 6,54,000. So there is a difference of hundreds. There is a difference of rounding of difference. There is no any problem. If you will write 653,289, even that is okay. But since in the question the annuity factor is given, that is 4.36. So that is why we have done it as 6,54,000. If the annuity factor has not been given in the question, only discount rate is given, then you need to compute like this, and you have to just capitalize this sole distribution right as 653,289. Right? Nish, I hope it is clear. Distribution right calculation is clear, Munish? Okay. Friends, the third concept is acquired by way of government grant. Generally, what happens, government says that whenever you install your plant, you construct your plant in a remote area, right? So there is a top management, for example, Mr. Jindal, Naveen Jindal. Who is Mr. Naveen Jindal? He was a member of parliament, and he is also the CEO or managing director and chairperson, I would say, of Jindal Steel and Power Limited. So Mr. Naveen Jindal, if I talk about the plants of these steel industries, the one of the biggest plant of Jindal Steel and Power is in Raigad, which was one of the remote area, but now it is developed area because Jindal has developed that area. So they have a plant in Raigad. Okay. So let's say the government will say these companies that please come and install these plants in our state, so that our state will get more and more revenue, more and more employment opportunities, right? And government is saying that we will give you something free of cost, right? For example, the government will say that we will give you land free of cost, but land is a tangible asset. It will cover under Ind AS 16 property, plant and equipment. Or government will say that I'll not give you land, I'll give you the airport landing rights free of cost, right? So we have a civil airport, and normally what happens, aviation authority charges for every lending. For every lending, this aviation authority used to charge the money, right? So it says that, we will give you the airport lending right free of cost. Your helicopter, whenever your helicopter or your small plane will come, will not charge any money from you. Okay. Or government will say that if you will install the plant in our area, right, we will give you the free import licenses. Normally, these licenses have a cost, but will not charge any cost from you or will provide at a concessional rate. Or I'll give you quota or any rights to access other restricted resources. For example, mining rights. Will give you free of cost mining rights. There could be a situation where I'll give you free of cost mining rights. So friends, an intangible asset may be acquired free of cost or for nominal consideration by way of a government grant or for a normal consideration by way of a government grant. For example, airport lending right, import license or quotas or right to access other restricted resources may be acquired free of cost or at a nominal value, at a very insignificant value, right? So in this case, standard says that in accordance with Ind AS 20, Ind AS 20 says that, which is a government grant standard, it says that record both asset and grant at fair value, right? So you have an option. Either you can recognize the asset and government grant at fair value. You can recognize the asset and government grant at fair value. Or recognize the asset initially at a nominal amount plus any expenditure that is directly attributable to preparing the asset for its intended use or sale. So let's say the government has given a mining right free of cost to a company. The government has given a mining right free of cost to a company, right? And what happened? The value of the mining right, fair value, market value of the mining right is 5 lakh rupees. So the first option, you will recognize the intangible asset, which is mining right, as 5 lakh rupees, and you will recognize the government grant at 5 lakh rupees. So an accounting entry will be mining rights account debit to deferred government grant 5 lakh rupees. Let's say this right is given for 5 years. So you will amortize this 5 lakh rupees intangible asset over a period of 5 years. And you will also amortize the deferred government grant over a period of 5 years. Right? You will also amortize the government grant over a period of 5 years. 1 lakh rupees you will amortize every year as an income. And amortization, depreciation, you will take as an expense. Right? Simple thing. Number 2, it says that if you don't want to recognize at fair value, you can recognize at nominal value also. For example, the government has given the mining rights free of cost, but the government is charging 1 lakh rupees for registration. The government is charging 1 lakh rupees for registration. So in that case, the nominal value which the company is paying, right? So that will be the cost of that asset. What will be the accounting entry? Mining right intangible asset account debit to bank account 1 lakh rupees. In this case, mining right has to be capitalized at 1 lakh rupees. And if this right is for 5 years, so the 1 lakh rupees has to be amortized over a period of 5 years. Sir, what happens if there is no registration charges? If there is no registration charges, in that case, this mining right has to be recognized at a nominal value just for the identification purposes. Let's say 1 rupee or 100 rupee or 1000 rupees, whatever. Right? In that case, this mining right has to be recognized at nominal value of 1 rupees. Okay. So friends, let me take you on the Excel file to give you the example with accounting entry. Right? Whatever I have told you, let me show you that example with accounting entry. Do let me know once this Excel file will be visible. Do let me know. Is it visible? Government grants. So government grants, in case of government grants, you have got the intangible asset either free of cost or at a concessional price. Option 1, recognize both government grant and intangible asset at fair value. For example, the government has provided free mining rights to the company for 5 years. The fair value of such right is rupees 5 lakh. Accounting entry, mining right account debit, tangible asset account debit to deferred government grant 5 lakh at the time of acquiring right. This 5 lakh has to be capitalized as an asset. This 5 lakh deferred government grant has to be recognized as a liability. At the end of every year, accounting entries amortization account debit, mining right, 1 lakh rupees, deferred government grant debit, other income by 1 lakh rupees. So there is no impact on the P&L, income of 1 lakh, expense of 1 lakh, zero impact. Okay. And at the end of 5 years, this intangible asset will become zero and this deferred government grant becomes zero. Option number 2, recognize intangible asset and nominal cost as directly attributable cost if any. For example, the government has given free mining right to the company but will charge 1 lakh for the registration. So mining right intangible asset account debit to bank account 1 lakh rupees. This will amortize over a period of 5. If there is no registration charges, mining right account debit, intangible asset account debit to other income account. So this is how this accounting needs to happen. This is how this accounting will be done. Is it clear? Friends, is that clear? Government grant accounting for intangible asset. So intangible asset either has to be recognized at fair value or has to be recognized at nominal value. Any question on this part? Let me know if you have any question on this part. Any question on this part, guys? I'm waiting for your response. If you don't have any question, I'll move forward. Have you understood it very well? Okay. Now the fourth part is exchange of assets. Friends, do you remember in PP I told you, if you are exchanging assets, right, it is like a barter transaction. When you are surrendering or giving your asset and you are acquiring an asset. So then I have told you the asset has to be measured at fair value, right? Except you will not measure that asset at fair value only in two circumstances. Circumstances number 1, when the transaction does not have a commercial substance, the transaction does not have a commercial meaning. The transaction does not have a commercial substance. You remember I have taken an example of a parking in the same society where two residents are exchanging parking. The value of the parking is same. The nature and feature of the parking is same, right? It is used for park the car. So this transaction is this transaction is lacking the commercial substance and hence fair value is not required, right? You can simply do one thing. Whatever asset you have acquired, the value of the acquired asset is equal to the WDV of the asset given up. But if the transaction has a commercial meaning, in that case, you have to recognize and measure the asset acquired is equal to fair value of the asset given up, right? Sir, what happens if we will not be able to determine the fair value of either the asset, neither given up nor obtained? In that case, standard says that, okay, if the fair value cannot be identifiable, there is no market value, market value cannot be calculated. In that case, whatever asset you have given up, there must be a WDV of that asset, which was lying in your balance sheet. So the new asset cost is equal to your old asset WDV, exchange asset WDV. But sir, if both this condition does not satisfy, means the transaction has a commercial meaning, it has a commercial substance. Second, the fair value can also be obtained. Then standard gives you two things. Number 1, if you are able to obtain the fair value of both the asset given up as well as asset acquired. You are aware about the fair value of the asset acquired, you are aware about the fair value of the asset given up. In that case, you have to use the fair value of the asset given up to capitalize your incoming assets, right? Why? Because this is something which you are paying as a consideration. Sir, in case we know both the fair value, but the fair value of incoming asset is more reliable than the fair value of outgoing assets. the fair value of incoming asset, the fair value of the asset acquired is more reliable than the fair value of the exiting asset. Right? Fair value of the exiting asset. In that case, friends, whichever fair value is more reliable, you have to take that fair value. In this case, you can take fair value of the asset obtained. But for all practical purposes, if in your examination, the fair value of both the asset has been given, fair value of the incoming asset as well as fair value of the outgoing asset, then you need to always take a fair value of the outgoing asset to measure the cost of the incoming assets. Your incoming asset has to be capitalized. Fair value of the asset acquired is equal to your cost of the asset acquired is equal to fair value of the asset given up. Right? Same concept which we have discussed in Ind AS 30, Ind AS 16, not 38, Ind AS 16. Same concept is there. Right? Same concept is there. Is that clear, friends? Is that clear? So again, I'm taking you to my Excel file just to reiterate this concept so that you will be able to connect when you will listen the video again. Please confirm once the video is once the Excel file is visible. I'm sharing the Excel file. Are you able to see the Excel file? Friends, are you able to see the Excel file? Okay. So if the transaction is having commercial substance, the asset acquired will be recognized at a value in the descending order. What does it mean? So transaction has a commercial meaning. Now you need to obtain fair value. Fair value of the asset given up. Whether the fair value of the asset given up is there, answer is yes. Recognize asset acquired at fair value of asset given up. If answer is no, then you need to check whether the fair value of asset acquired is there. Answer is yes. Recognize asset acquired at fair value of the asset. If the answer is no, so asset given up is not there, asset acquired is not there, then WDV of the asset surrendered oblique given up will become the value of the asset acquired. Recognize asset acquired at WDV of the asset given up. The same concept which we have read in Ind AS 16. Any doubt, Tanisha? Any doubt, Viraj? So we have covered 4 mode of acquisition. We have covered separate acquisition, which is purchase price plus import duty plus non-refundable taxes minus discount and rebates plus directly attributable cost. Then we discussed acquisition of intangible asset by way of business combination, and we discussed that in this cases, the intangible asset acquired has to be measured at fair value. Then we discussed government grant. In case of government grant, we discussed intangible asset and grant has to be either measured at fair value or intangible asset has to be measured at which value? Nominal value, right? Plus directly attributable cost, if any. Fourth, we have discussed the exchange of assets. If we are exchanging the asset, the company is exchanging the asset, the company is giving some asset and buying intangible asset. In that case, the value of this intangible asset is equal to the fair value of the asset given up. If the fair value of the asset given up is not there, then you can go with the fair value of asset acquired. If the fair value of the asset acquired is also not there, then you can go with the WDV of the asset given up, which was there in the balance sheet. Right? Okay, friends. So we covered this aspect as well. Now, friends, we'll discuss the internally generated intangible asset concept. Before that, friends, we'll discuss the internally generated goodwill. Can the internally generated goodwill be capitalized? Answer is no. Standard prohibit the capitalization of the internally generated goodwill. Why? And you can tell me why. Because, sir, it is not meeting the criteria of identifiability. You cannot say that since last 50 years I'm doing a business, I have a brand, I have a goodwill, and now I need to capitalize this goodwill in my books, right? Capitalize this goodwill in my books on the basis of valuation. What accounting entry I need to pass? whether I need to pass intangible asset to reserve. So one side I am just loading my asset, another side I'm loading my reserve. So I'm inflating my asset, I'm inflating my reserve. Okay. So internally generated goodwill is not allowed to be capitalized. Internally generated goodwill is not allowed to be capitalized. It is prohibited in Ind AS 30. Right. So advertisement, promotion related activities, it is not training fees, it is not allowed to be capitalized. Now there could be some other internally generated intangible asset also. For example, typically in case of chemical companies, pharmaceutical companies, right, where they are doing a lot of expense on research and development. When the COVID came, let's say Sun Pharma, Renbexy, so many companies, Lupin, Cipla, so many companies were doing a lot of research on the formula, on the vaccine, on the antivirus, right, which can deal with coronavirus, right? And they were so hopeful that if they will be able to find the formula which can fight with the coronavirus, probably they will be able to learn, they will be able to earn crores and crores of rupees in future, right? By selling this vaccine. Okay. And they were doing a lot of research on the formula. Once you will be able to know that, okay, this virus is killed by, sodium plus potassium. Let's say this virus is killed by sodium plus potassium. In that case, probably you will be able to demonstrate that, okay, now we got the formula, now we got the knowledge, and now we will apply the knowledge and we will have the future economic benefit. Let's say the companies has got the vaccine formula. So what they can do, either they can manufacture the vaccine, manufacture the medicine and sell that in the market, right? Or they can sell the formula to the other companies also, so that other companies will also use this formula, use this salt, and these companies also manufacture the vaccine, right? So of course it will have a future economic benefit. And in this case, when I'm talking about the research and development, they are also putting efforts in terms of time, and they are also incurring expense in terms of money. So time and effort and expense in terms of money is also there. Time, effort, and money is also there. Right. So friends, number one, standard says that whenever there is an internally generated intangible asset, you have to split the internally generated intangible asset into two parts. You have to split the internally generated intangible asset into two parts. Sir, what is that? What is that internally generated intangible asset split? You have to split the internally generated intangible asset into two parts. One is research and another one is development. One is research and another one is development, right? So friends, I hope you are able to see the Excel file. You're able to see the Excel file. After exchange of asset, we talked about that internally generated goodwill cannot be capitalized. Recognition is prohibited as per Ind AS 38. Now we are talking about internally generated intangible asset. So this internally generated intangible asset, this internally generated intangible asset has to be bifurcated into two phases. Number one is research phase. Research phase. Number two is development phase. Number two is development phase. Guys, although it is very theoretical kind of thing, but don't worry. I'll explain this very practically. I'll explain it very practically. You will be able to remember this part. Okay? Just focus and concentrate on the session. Just focus. Research phase and development phase. There are two phases of internally generated intangible asset. Research phase and development phase. Research phase and development phase. Now, what is research phase and what is development phase? I believe my Excel file is visible to everyone. I believe the Excel file is visible to everyone. Is it visible? Okay. Very good. Research phase and development phase. Research means acquisition of knowledge. Research means acquisition of knowledge. Development means application of knowledge. Research means acquisition of knowledge. acquisition of knowledge. Development means application of knowledge. Application of knowledge. Friends, to demonstrate this, I'll give you one example. When you are a CA student and you have not cracked the CA final, can you say with surety that yes, I will be a CA and I will give a future economic benefit to my company, I'll earn this much, I'll earn this much? Of course, you are hopeful, you are hoping, right? But can you say with surety that yes, I will be able to crack in March, I will be able to crack in May or November? Answer is no. You are doing a lot of research. You are acquiring knowledge. You are reading, you are learning financial reporting, auditing, financial management. You are learning a lot of subject. You are learning a lot of concept, and you are making yourself equipped to become a chartered accountant, right? And you are acquiring a lot of knowledge, but your knowledge will be demonstrated, right? Your knowledge will be fruitful. You will be able to apply your knowledge in the practical world when you will become a chartered accountant, right? So it means whenever you are acquiring the knowledge, it means there is a research phase. But when you will say that yes, now I have acquired the knowledge and now I am able to demonstrate the knowledge, now I am sure that I will be able to apply my knowledge. In that case, you can say that the development phase was started. In that case, you can say that the development phase has been started. The development phase has been started, right? So research phase is that phase where the acquisition of knowledge is there. Development phase is that phase where the application of knowledge is there, right? Sir, it is a bit complex. How will we be able to understand that, this development phase is started? And in chartered accountant example, it is quite simple that if we become a CA, the development phases start, right? But sir, in practical life, let's say if you were talking about pharma companies and these pharma companies were doing a lot of research, right? And they are acquiring knowledge. Their scientists and doctors are researching what could be the probable antivirus for this coronavirus. So they are using a lot of permutation, combination. They are acquiring the knowledge, right? So this will be the research phase. But when we will say that yes, when they will sure that okay, now my development phase will start. So friends, in standards, some guidance is given. In practical world, in practical life, lot of documentation, but lot of documentation will be there. Lot of documentation will happen. Lot of documentation will be there for this application of knowledge. Lot of documentation will be there for development phase, right? Some conditions are given in the standard that if these conditions will be satisfied, then you can say that the development phase was started. I'll discuss about those conditions. But as of now, just remember there are two phases: research phase and development phase. Research phase is that phase where the company is acquiring the knowledge. The company is uncertain about the confirmation of the outcome. Development phase is that phase where the company has acquired the knowledge. Now the company has to apply the knowledge to sure that the company will get the future economic benefit. That's all, right? Friend, standard says that amount spent in research phase should be charged to P&L. Sir, since the company is not clear that whether the company is able to get the knowledge or not, so whatever expense you have been incurred in research phase, it has to be charged to the P&L. It has to be charged to the P&L. But whatever expense you have incurred in the development phase has to be capitalized. It should be capitalized. It should be capitalized. Okay. Amount spent in development phase should be capitalized. Amount spent in research phase should be charged to the P&L. Is that clear? Sir, when you will say that the development phase will start, standard says that development phase is considered to be start if all the following condition will met. If all the following condition will met. Sir, what are the conditions? Right? So first, segregate into the research and development phase. Segregate into the research and development phase. Just give me a minute. This we discussed. Charge all expenses related to research phase to P&L. Development costs are capitalized if entity is able to demonstrate the below condition. If the technical feasibility is there, intention to complete the intangible asset and use or sale is there, ability to use or sale is there, how the intangible asset will generate probable future economic benefit, adequate technical financial ability to measure the expenditure is there, sir. Not able to understand anything out of it. Don't worry. Let's again go to the Excel file and there we will understand these conditions. Okay. Although you need to learn these conditions, but let's go to the Excel file and there we need to learn these conditions. What are these conditions? First of all, development phase is considered to be started if following conditions will met. All the following conditions will met. And what are the conditions? Just to remember the condition, I'll give you a simple word, pirate. Have you heard about the word pirate? Pirates of the Caribbean. Have you heard about the word pirate? Do you understand the meaning of pirate? What pirate means? Yeah. Have you heard about this word pirate? What is the meaning of the pirate? So pirate is the robbers, the thieves which are there in the sea. Samudri Daku is known as pirate, right? Sea beggars, sea robbers is known as a pirate. Okay. So this is known as a pirate. So we will, to remember these conditions, please remember the word pirate. Sir, what pirate stands for? Now, I'll give you one by one the condition. I'll explain the condition one by one. Okay. Number one, probable future economic benefit should be there. Once you have acquired the knowledge, once the scientist and doctor have confirmed that when I'll merge sodium plus potassium plus hydrogen, so this will be my salt for fighting the coronavirus. So of course, future economic benefit is probable because the company will be able to manufacture medicine and the company will sell the medicine. The company will get the future economic benefit. The company will be able to earn revenue. So probable future economic benefit should be there. I, intention to complete and use or sell the asset. Intention to complete and use or sell the asset. The management must have an intention to complete or to use or sell the asset. For example, after some time, the scientists and doctors have a confidence that yes, now they are moving into the right direction and now they are 95% sure they got the right formula, right? And of course, future economic benefit is there. But at that point of time, the management should have an intention to complete and use or sell the asset. For example, it took around 6 months, right, to develop that formula, or I would say to research on that formula. And by the time the scientist and doctor was clear, the management does not have an intention to complete this formula. Why? Because this virus has automatically settled, or the other companies have already researched the formula and the vaccine was started. So now the company does not have an intention to complete or expense further amount into this project, right? So there must be an intention to complete and use or sell the asset, right? The company must have an intention. Sir, how we will be able to know? From the examination purposes, it will be given in the question. From the practical life purposes, you have to discuss with the management and you have to get the letter of representation from the management, confirmation from the management. Yes, they are intending to complete and use or sell the asset. You need to check, are they working on that project or they stop that project? You need to check that. R stands for resources are adequate and available for completion of asset. Resources are adequate, right? The company has enough scientists, the company has enough doctors, the company has enough money to spend on the development or spend on the further research, right? So the company is certain that yes, we will be able to achieve it. But now the company has to spend some additional money as well. So company has enough resources, the technical and financial resources to complete the asset, right? So R stands for resources are adequate and available for completion of asset. ability to use or sell the asset. Ability. So the company reached the development phase, but government has told that this coronavirus vaccine will not be sold by the private players. It will be sold only by the government players. Means the PSUs, public sector undertaking. The private sector undertaking will not sell this coronavirus vaccine. So it means the company does not have an ability to use or sell the asset. The company has an intention, but the company does not have an ability to use or sell the asset. So in that case, if this condition is missing, you cannot say that the development phase was started. T stands for technical feasibility. Normally what happens in these kind of projects, the company prepare the technical feasibility document. Let's say if I'm expensing 100 crores, what is the technical feasibility? In how much time I will be able to earn the revenue? How much, dose of vaccine will be sold out? What is the target customer? So there is a technical feasibility which needs to be assessed, whether this project will be viable or not. E stands for expenditure can be measured reliably. If I talk about this P and E, it is a simple condition. Future economic benefits should be probable and cost can be measured reliably for measurement of any asset. So for internally generated intangible asset, which will be capitalized in the development phase, 6 conditions should be satisfied. What are those 6 conditions? Future economic benefits should be probable, intention to completion should be there, resources should be adequate, ability to use or sell the asset should be there, technical feasibility should be there, and expenditure can be measured reliably. These are the 6 conditions which you need to consider for understanding the development phase. Friends, I hope you guys are able to understand with the help of this thing. I hope you guys are able to understand this. With this example, I hope you guys are able to connect this when the development phase will start. Is it clear to all of you? Guys, I have used the most simple language to make you guys understand this example, to understand this concept. Now, I'll discuss one example to make you guys understand that how this expenditure is going to be capitalized. Example, A Limited has started doing a research for a medicine on 1st April 2019. A Limited started doing a research for a medicine on 1st April 2019. The company has spent 50 lakhs till 31st May 2021. So from 1st April 19 to 31st May 2021, the company has spent 50 lakh rupees. On 1st June 2021, the company has met all the criteria for development and spent rupees 30 lakh more till 31st March 2022. On 1st June, the company has met all the criteria for development. It means the amount spent till 31st May 2021 has to be charged to the P&L as a research phase, right? And from 1st June 2021, the company has to capitalize. The development phase was started, and the company needs to capitalize this 30 lakh rupee as a intangible asset, right? Explain what will be the treatment of the above rupees 80 lakhs. What will the treatment of this 30 lakh rupees? So research phase is my 1st April 2019 to 31st May 2021, right? So my 50 lakhs should be charged to P&L. My development phase is 1st June 2021. It will be from 1st June 2021. So 30 lakhs should be capitalized as an intangible asset, internally generated intangible asset. Right, friends? I hope it is clear to all of you. Is it clear or not clear? Technical feasibility, Abdul. Technical feasibility means the completion of the project is technically feasible. For example, if you are spending 5 lakh rupees and now you are thinking that I will be able to earn a future economic benefit of only 2 lakh rupees. Do you find this technically viable? Do you find this project technically viable? Answer is no. So there should be a technical feasibility should be there. Okay. So friends, we discussed this part of internally generated intangible asset where we discuss research phase and development phase. We discuss research phase has to go to P&L, development phase has to be capitalized, and the development phase will start when all the condition will be satisfied. What are the condition? Pirate, probable future economic benefit, intention to complete, resources should be adequate. A stands for what? So A, ability to use or sell. T, technical feasibility. E, expenditure can be measured reliable. If you are not able to distinguish between research phase and development phase, still the company is dicey that whether we will be able to get the future economic benefit or not. If you are not able to distinguish between research phase and development phase, you need to consider that as a research phase and you need to charge the expense to P&L, because development phase is a phase where the company is not dicey. The company is very much sure and certain. Is that clear? Is that clear, friends? Internally generated goodwill shall not be recognized as an intangible asset and it has to be charged as an expense in the P&L. Sorry, internally generated intangible goodwill is not required to be recognized. So development phase we have discussed. No capitalization costs that do not meet the criteria. Internally generated brands, market share, publishing titles, customer list, these are not going to be capitalized. Internally generated goodwill is not going to be capitalized. Cost already expense, sir. So basically what happened, we understood that, it was a research phase and we have charged the expense to the P&L. We have charged the expense to the P&L. But in the next year, we realized that the development phase was already started, right? And we have kept it as a research phase and charge of the expense as a P&L. So now we want to capitalize the previous year expense as well. Answer is no. Standard says that once you have expensed off the cost considering research phase, you cannot capitalize it subsequently. You cannot consider this as a correction of error. You cannot do that. Right. So friends, quickly we can do this case study. X Limited has been developing a new production process and on 31st October, it has been able to demonstrate that it is likely to enjoy future economic benefit from the research. It incurred 50 lakh on this account till 31st October, 24 lakh afterwards. As on 31st March 17, it estimates the recoverable amount of know-how embodied in the process is rupees 22 lakhs. So friends, in this case, 50 lakh rupees till the research phase. 24 lakh is the development phase. So what happens? If you will see, 50 lakh will be charged to P&L. 24 lakh will be capitalized as an intangible asset. But on the reporting date, the recoverable value of this asset is only 22 lakh. It means 2 lakh, 24 minus 22 will be recognized as a impairment loss. Will be recognized as an impairment loss. Is that clear? Is that clear, friends? Yeah, I hope it is clear to all of you. We'll quickly do this example or case study from ICAI study material, and then we will conclude the session for the day, right? Because we have covered the most important part from initial recognition and measurement. We have completed this, and then we will move to the subsequent recognition in the next session. So let's quickly discuss this example. X Pharmaceutical Limited requires your opinion in respect of the following accounting transactions. Acquired a 4-year license to manufacture a specialized drug, means medicine, at a cost of rupees 1 crore at the start of the year. Production commenced immediately, right? The company has purchased a license. Tell me whether this will be capitalized or not capitalized as an intangible asset. Whether it will be capitalized as an intangible asset or not. Yeah? It should be recognized as an intangible asset because it is a separate purchase. The company has purchased. So it is an identifiable asset, right? It is an identifiable asset. So company has to capitalize this intangible asset. It has to be recorded at 1 crore rupees. So this is a case of acquisition of intangible asset. So 1 crore will be recognized as an intangible asset. Also purchased another company at the beginning of the year. As part of that acquisition, X Pharmacy acquired a brand with a fair value of rupees 3 crore based on the fair sales revenue. The life of the brand is estimated at 15 years. Company is paying a premium. Why this company is paying a premium? The company is paying a premium because the acquiring company has a brand, and that is why the acquirer is paying a premium. So acquirer is paying money for that premium. Acquirer is paying a premium or money for that brand. So that brand should be recognized as an intangible asset. That goodwill should be recognized as an intangible asset because it is purchased. It is a purchased. Okay. So this brand will be recorded at 3 crore rupees, and it has to be amortized over a period of 15 years. Sir, since the acquirer has paid for this brand, that is why you are capitalizing. Can this acquiring company itself recognize its brand? Answer is no. Internally generated brand and goodwill is not allowed to be capitalized. Spent rupees 1 crore on an advertisement campaign during the first 6 months. So the company has paid advertisement cost, promotion cost. Subsequent sales have shown a significant improvement, and it is expected this will continue for 3 years. So guys, this promotion cost, advertisement cost needs to be recorded in expense. It cannot be capitalized. Advertisement expense of 1 crore has to be expensed off. Doesn't matter the future economic benefit will receive in the next 3 years or 5 years, doesn't matter. It has commenced developing a new drug, which is drug A. The project cost would be rupees 10 crore. The project cost would be rupees 10 crore. Clinical trial proved successful, and such drug is expected to generate revenue over the next 5 years. So the company has developed a new medicine, right? And the project is costing rupees 10 crore. And the clinical trial, the scientists have proved that, the doctors have proved that this project is successful, and this medicine is expected to generate future economic benefit over the next 5 years. Cost incurred till 31st March is 5 crore, and cost incurred after 31st March 2001 is 5 crore, right? So cost incurred till last year is 5 crore, and in this year it is 5 crore. So friends, tell me, what is the cost of this intangible asset? First of all, the development cost incurred during the financial year 1-2 should be capitalized cost of intangible asset as on 31st March 2002. Right? In that case, what is the opening cost? Opening cost is 5 crore. Development cost is 5 crore. So total cost is 10 crore. Total cost is 10 crore. Right? Total cost is 10 crore. So in this case, the total cost of 10 crore needs to be capitalized. Okay, it needs to be capitalized. Since in this question it is not written that, what is the research phase expenses and what is the development phase expenses, we will assume that this entire expense is development phase expense. It has also commenced developing another drug B. It has incurred 50 lakh rupees towards research expenses till 31st March 2. So this will go to P&L. The technical feasibility has not yet been established. How the above transaction will be recorded in the books of accounts of X Pharmaceutical Limited. Right. So friends, these are the answers. So first, it should be capitalized. The license should be capitalized as an intangible asset. Brand should be capitalized as an intangible asset. Advertisement expense has to be expensed off. Development cost of 10 crore has to be capitalized as an intangible asset. Research phase of 50 lakh has to be charged to the P&L. It has to be charged to the P&L. Friends, do you have any question on this case study? Do you have any question on this case study? Do you have any question? Huh? No? So I would like to conclude the session, and before that, let's have a Maggie time. Let's have a 2 minutes to recap this entire session which we have started today. So we discussed that Ind AS 38 intangible asset, and we discussed that this standard takes care of the accounting for intangible assets. What is an intangible asset? An intangible asset is an identifiable non-monetary asset without having physical substance. Identifiable means either it is separable, means it is able to separate it from the entity and is able to sold, licensed, rented, etc., etc. Or it is arising from the contractual or legal rights. Okay. What is meant by monetary or non-monetary asset? Non-monetary asset means those assets which are not monetary asset. What is meant by monetary asset? Monetary asset are like trade receivable. Monetary asset are those assets. Monetary assets are those assets which can be settled, received in a fixed unit of currency. What is meant by without having physical substance? Means which you cannot see, you cannot touch, you cannot hold. So that is known as a without physical substance. Okay. Then we discussed for any item as an intangible asset, identifiability is again important, plus control is important. Control means having a future economic benefit or stopping other to access the future economic benefit. Plus future economic benefit should be there. Then we discuss the recognition criteria. Intangible asset is going to be recognized if future economic benefit is probable, cost can be measured reliably, and it should meet the definition of intangible asset. Then we discussed that intangible asset has to be measured at cost, but the measurement will depend upon the mode of acquisition. If the intangible asset is acquired, it has to be measured at cost. Cost includes purchase price plus non-refundable taxes plus import duties, if any, minus discount and rebates plus directly attributable cost. If it is coming out of business combination, it has to be measured at fair value. If it is coming out of government grant, the government grant and asset can be recognized at fair value, or it can be measured at nominal value plus directly attributable cost, if any, right? If there is a case of exchange of asset, in that case, the asset acquired has to be measured at the fair value of the asset given up. If the fair value of the asset given up is not there, the asset acquired has to be measured at the fair value of the asset acquired. If both the fair values are not there, in that case, the fair value of the asset, value of the asset acquired is equal to WDV of the asset given up. Internally generated goodwill brand is not, it is not allowed to be capitalized. Internally generated asset has to be bifurcated into research phase and development phase. Research phase is acquisition of knowledge. Development phase is application of knowledge. Research phase is going to be charged to the P&L. Development phase is going to be capitalized, right? Development phase will be started if all the 6 conditions will met. Condition was pirate. Future economic benefits should be probable, cost can be measured reliably, adequacy of resources should be there, intention to complete is there, ability to use or sell is there. So in this case, whenever the development phase will start, the expense from the development phase to the completion will be capitalized, right? And that expense in the research phase will be charged to the P&L. If a company has charged any expense to the P&L as a research phase, it cannot correct in the later date, right? It cannot capitalize subsequently. This is what we have discussed in last 3 hours. Thank you so much, friends. And I can see a lot of feedbacks. Thank you so much for these good feedbacks. Thank you so much. And I'm glad that you guys are able to understand this technical standard, right? Thank you so much. Have a good day. Yeah.